Hey everybody, welcome back to the channel. You're at the Cryptopolitan, your one-stop shop for all news when it comes to cryptocurrency and blockchain technology. I'm your host, Satoshi Shawn. I'm very glad you're here. If it's your first time here, please hit the subscribe button and the bell for notifications. Try to get out a news report to you every day and a weekend report as well as coin analysis and price prediction, which we're doing a couple of times a week now also. If you're a new subscriber, old subscriber, please crush the like button. It really helps us out. Let's go over to the Cryptopolitan and head into some of the stories. This, I think, is a very interesting story. We've done a bunch of stories on CBDCs, or central bank digital currencies. They're coming this year, even with the pandemic, even with everything that's happened, even with China saying it's going to have to slow it down. It's coming. Probably more than one this year. But this guy talked about it as one of the, I think he's from China. Well, the International Monetary Fund managing director. So the IMF, it's just another devil. They're all banks devils. But Tao Zhang. Now he gave a speech at his alma mater, the London School of Economics. So he said the usual things that they say, that it's going to help the unbanked, and cash is not, easily accessible to people, and it's hard to move around, plus security and all that kind of stuff, which is what he said. He said something about a state-issued digital currency, but it said backed by like a trustworthy government, which no government is trustworthy. Here it goes: a domestically issued digital currency backed by a trusted government, denominated in the domestic unit of account. There's no such thing as a trusted government. You can't trust any government. Which this is kind of the status quo now. This is the party line that all banks are starting to take, because of privately issued stable currencies, that they are not easy to regulate. They could be scams. These have to be issued for that, and people need to shy away from stable coins, basically. But he did talk about the flip side of it, which is the bad thing about CBDCs is it could get people to move away from fiat currencies, because they're going to start using digital currencies, and the move from digital currencies to cryptocurrencies and seeing how they work is not even a jump, not even a leap. It's not even a step. It's just a little tippy toe, and you're moving over from digital currencies to cryptocurrencies. So he finally is bringing up that point. That is the main thing I think that's scaring banks about these CBDCs, is just because then people will know and be into digital currencies and see how easy it is to start using Bitcoin, Litecoin, Divi, any kind of Ethereum, even, any kind of digital medium of exchange, and see how one that's not controlled by corrupt individuals and not centralized is a much more advantageous choice. So, but I thought it's cool that someone's finally talking about the elephant in the room that nobody wants to talk about. Speaking of an elephant in the room, we did a story on the fact that we really can't call Bitcoin so terribly speculative, and man, my words are just leaving me. But Bitcoin is more attractive as the coronavirus spreads, as study shows, and that's because now, when you're comparing the volatility of Bitcoin, when you compare the volatility of Bitcoin to the U.S. markets, like the past 2 weeks, month, 2 months, it's not as volatile. It's not as scary. So it is becoming a much more attractive asset as other assets crash. So Bitcoin fell 29%, while most stocks compared fell 30%. So when you look at, that was the big thing, is this massive risk with Bitcoin and cryptocurrencies, and that's why you had massive gain But now the risks are not that dissimilar. So if you wanted security, you were looking at things like bonds. Bonds are paying zero interest, some cases negative. Um, there is no safe anymore. I think that's been proven. There's no safe way to make money, period. And now that people are seeing that, I mean, why not go with the asset that's done better over the past decade than any other asset? That's just kind of common sense. Can the banning of shorts positions help stop flash crashes? Yes, they can. It really does take a lot of power out of the whale's hands. It also takes a good way to make money for investors out of their hands. There is prominent exchanges like OKX, Binance, and BitMEX are the primary crypto trading hotspots, and Bybit definitely one of the big ones. Their trading trends suggest that leverage trading is creating a lopsided impact on cryptocurrency prices. Yes, that's true. I mean, it's one of those kind of classic arguments, or limiting shorts to a smaller amount. Smaller leverage, maybe, but I mean, it is true. It would help the volatility of the market. When the U.S. stock market was crashing, they stopped shorts on a lot of things, just period. And because people were making money on shorts, but I don't think it was whales or manipulation that was killing the market. They just stopped it because people were making so much money. Last, Tim Draper. Love Tim Draper. I think he's awesome. I'd like to interview him one day. He's involved with Space Chain, one of my favorite cryptocurrency project. But he's talking about the startups for crypto in India, and now he's very, very interested. And this guy is multi-billion-dollar, but he's like the Midas touch when it comes to startup investments. And he is looking at India as kind of the landmark, which I thought this too, and I was excited, but I was given a lot of hope because the system really worked. The Reserve Bank of India, the devil, they banned cryptocurrencies. They're clearly against cryptocurrencies. It went before the Supreme Court, and the system worked. The Supreme Court reversed the decision and took off the ban on cryptos. That's just was insane to me that a government entity would actually work the way it's supposed to, and it did. So because of that landmark decision, it really gave a lot of authority and economic power to cryptocurrencies, because this is a real decision. It's not up in the in the air. It's not a framework. It's a legal precedent. So I think a lot of money is pouring into India. Draper is investing, Hashcash, Binance. A lot of money is pouring into India. I think India is going to be a big hub now of cryptocurrency. It's coming. That is about it for today. I will see you guys on the weekend report, and I'll probably do another coin analysis. I'm going to do Dogecoin because Dogecoin is fun, and I think it'll be cool to do. I'll see you guys later. Take care. Bye-bye.